Yeah, no, I think I think you're absolutely right. I mean, we're all looking at these markets; they're really growing quickly. Maybe I'll set a little bit the stage because I think that one thing that I wanted to say here is that there are loads of types of investors. There are venture capital investors who typically are taking very high risk and investing in companies that have high likelihoods of failure, and so their model is a little bit towards investing in companies that have the possibility to be able to reach those $1 billion. You have angel investors who invest at a earlier stage than that. You have you have all types of other funding mechanisms that are out there as well. You have kind of these new age, I would say, VC firms like Indie VC or Earnest Capital, who are more interested in investing in companies where they're like, we're your last check instead of like going through several rounds of investment. I don't think that any of these players are going to go out of business. First of all, I think that no code is simply saying, hey, we should be thinking about all these different things. And there are companies, for example, the VCs back that no one would usually touch. Let's talk about biotech. I mean, you're building a biotech company, like you need a lot of money to be able to build some of these companies. And that's where venture capital is willing to take larger risk for larger return. And I think that there's just this shift that is happening. But Manuel, I'd love to hear your thoughts on this because, you're more of an operator who invests, but just because, businesses need money to grow. So it's like, how can we get the money? Well, let's invest. What's your perception of how this kind of ecosystem is about to kind of shift overall?
You mean the ecosystem regarding of VCs, angels, and these what do you call indie VCs, etc. Or
Yeah, just like the investment world and like and for entrepreneurs, maybe your perspective as an entrepreneur, like how you're looking at that and thinking of like, where you should get money for different reasons.
yeah, so maybe several answers to that. With a little bit more regard to no code. I think the classical VC will very much look into no code into the platforms. The big shift towards corporates and automation inside the corporates has not even started, I think, and that would be huge, and that's definitely a unicorn territory at some point. And then what we're seeing and what we are interested in as well is so we would also or we have invested in one that does B2B automation, but there are so the level of entry is so low that you don't need a lot of capital. You need more the capability to build communities, to do go to market strategies, etc. So the tech might not be that defendable, but the defense mechanism, if you will, is communities, stuff like that. And those entrepreneurs don't need a lot of money upfront money. Maybe it's a little bit like after the .com boom when servers were so expensive and it was super expensive to really even start a company back then. So so costs are even lower now. I think you can with just being super smart and not having a technical background, you can really build viable businesses. And the most important thing is you don't need a lot of people most of the time. But as you can automate a lot of things, these businesses tend to become profitable from very early on. And we also think, and that's a little bit our take, that with small cash and with fairly acceptable risk, you can build businesses that are solo entrepreneurs or two entrepreneurs and almost put them on autopilot, and you can make very healthy profits and margins with that. So that's a new category of investment, maybe also, and that's why we love this space. And that's not something where we compete with VCs or anyone, because that's still not enough. And I think that many more people will look into that space. Then looking at these new VCs, if you will, or institutions that or organizations that provide capital, like InnoVC, Earnest, etc. By the way, Earnest invested into MakerPad. So that's definitely a tool. MakerPad is entirely run on no code. I think we will see a lot of alternative business models. Why? Because we have from Silicon Valley and from the whole startup lifestyle kind of thing, startup culture, we have learned that VC is the way to go. And there are a lot of entrepreneurs out there and entrepreneurs conferences and stuff like that. So we talk with them on a regular basis that just don't know what they're getting into when they do the VC game. And it's totally valid to do the VC game, but that means you need a liquidation event at some point, an exit, right? And a lot of entrepreneurs also just want to run businesses and live their life off it, and maybe, I don't know, sit somewhere in the countryside and have a solid business running, and don't necessarily want to go for growth. And that's definitely a trend that we are seeing in the market, and that's where indie VC, earnest capital, etc., are really providing a very good way through revenue-based financing to just get to just get the capital in. And these businesses most of the time also don't need that much capital. And I think in this lower end, we're going to see, so this profitable business building, we're going to see a lot more also capital providers.